Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It's January 21st, 2019. Tonight I'm going to take a look at the Dow Jones, and in this case we're going to be using the S&P as our proxy because they are both showing virtually the same numbers and the same reaction to the market. So what we have in both instances for the S&P and the Dow is a mixed bag here when it comes to the trend. Now the technical indicators that we have, which are according to 18 separate instances of what is looking at the market and looking for bullish and bearish opportunities, that is still positive. That's what the single arrow represents, 18 different indicators lumped together. So that's our technical rating. Now, the reason I'm pointing this out is that we had a pivot high that occurred here in both the Dow and the S&P 500, and that's really what I want to focus on here this evening. So if we take a look at the Dow in itself, this is YM, so these are daily bars for the Dow futures, and with the sell-off that we had and the reversal we had, we've now finally, with this little pop to the market, finally gotten overbought according to our elastic level, and we're starting to show some signs that the market could have a little bit of reversal. I'm not expecting a crash. I'm not expecting a full bore reversal, at least not as of right now, because the systems are actually net long. But there is a scenario where we're starting to unwind some of our long positions. Now, let's just kind of get an overview here of the technicals. Last week we broke above this yellow line, that's the 50-day moving average. This gray line right there, which is literally flat, is the 200-day moving average. Now it's taken a lot of energy to get up to this level. Now we're finally in overbought territory, having broken past these two support levels, this 27 and this 37. Those represent historic support levels to the market, and having broken below that, the market accelerated downside. It found some support and then it started to rally, and it took a little bit of energy to break through these particular levels. So the 37 represents the strength to the support level, and so that the higher the number, the stronger it is. Now both of this 37 and 27, this one right here and this one right through there, they're basically on top of one another. So we use this number as our official support level. So that's at 24,216. That is the level that you really have to really watch when it comes to the Dow Jones. And that's going to basically coincide here with the 50-day moving average as it is right now. This one will continue to move while this one will stay cemented in that number I just gave to you. But bear in mind that that strength to the market, having broken above both the 50-day and this support level right through there, it's probably going to take a little bit of a break because it's expended a lot of energy getting into that, so it wouldn't be a major surprise. Now our systems, the way that they're reacting to this is that we had a liquidation here early this morning in the Dow futures, and from that perspective we had a nice little profit of around $2,000 or so, 2,500 thereabouts. And with that taking place, now we're starting to unwind, and this is only on 60-minute bars, but we're starting to unwind some of our positions. So as it stands right now, we are net long the market with 1, 2, 3, 4 long positions, or systems if you will, and we have one short position that's out there. So net, but they're going to cancel out. So we've got 4 long, 1 short. That means we're net long 3 positions. And so we've got a nice little open position profit, net across the board. If the market could sell off, then this short will start to regain some of its profits. But we do have some nice open position profits on the longs. And having liquidated that one position, because there wasn't really a lot of action here today with trading, with the holiday in effect here. But I just want to point out that we at least did unwind one of the long positions. It was a 60-minute bar system, so that leaves us with a 240 a daily, another daily, and a 120-minute, and then the weekly is the short system, which has been out there for a period of time. And so with that with some perspective, having gotten overbought, broken above the support level. I'm honing in on that particular support level as something that's going to be important. And if we do recover here, just kind of sell off a little bit, but stay above that level and stay above the 50-day on a closing bar basis, then we'll find ourselves in a position where we can find ourselves hopefully basing a little bit, releasing some of that energy, regaining some of that energy, and having the market theoretically be able to rally a little bit further. But just be aware that we are starting to unwind at least one position in the Dow and taking advantage of this particular swing to the market. So let's see how things kind of play out here with the Dow. Watch the systems, and if market starts to fall below that 24,000 level, or 24,216, that's the magic number for us, then beware on a closing bar basis that the market could start to sell off a little bit. So watch that level, and we will take a look at some more markets tomorrow. Bye-bye.